They say the market teaches everyone a lesson. The question is whether you can afford the tuition. I've watched traders rise from nothing, build small fortunes, and lose it all before they even understood what game they were playing. The market doesn't care about ambition or intelligence. It rewards discipline and punishes confusion. And that's what Jesse Livermore understood better than anyone. He called it a law of human nature, not of finance. A law that governs every trader who steps into the arena. The Livermore Law. Before we go deeper, let me ask you something. Have you ever felt certain you had the market figured out, only to watch it turn against you in silence? Comment your answer below. Every trader has felt that moment of betrayal, when logic collapses and emotion takes over. Now, imagine this. It's the early 1900s. Wall Street is young, wild, and ruthless. The ticker tape is your only lifeline. Men invests are shouting prices, and every second feels like a test of nerve. A young trader named Jesse Livermore stands among them, quietly watching. He isn't shouting, he's studying. Every twitch of a stock price, every reaction from the crowd. He begins to see something that no one else sees. Patterns not in prices, but in behavior. Livermore didn't trade the market, he traded human nature. He once said, "There is nothing new on Wall Street. There can't be because human nature never changes." And that's the first truth behind the Livermore Law. You are not trading stocks. You are trading your own reflection in the crowd. Modern traders have the same problem. The screens are faster. The data is cleaner. The psychology hasn't changed. Fear still drives the sell button. Greed still blinds rational judgment. The cycle repeats, generation after generation, because traders refuse to learn the one law that never breaks. The market is designed to exploit human weakness. Think about that for a second. Every chart, every price movement, every headline, every tweet, they all play on emotion. The amateurs react. The professionals wait. Livermore knew that patience was not passive. It was a weapon. Waiting meant observing when others overplayed their hand. His fortune was built not on constant action, but on selective aggression. He wasn't a gambler. He was a hunter. And every mistake he made carved a deeper understanding of himself. That's what most traders never realize. The market is not your opponent. It's your mirror. It shows you your impatience, your arrogance, your fear, your hope. The Livermore Law says, until you conquer yourself, you will never conquer the market. In every trading room, there's noise. Charts flicker, positions flash, red or green, dopamine fires, and the heart races. The beginner tries to control the market. The experienced trader tries to control himself. That's the difference. That's the divide between the 10% who survive and the 90% who vanish. Every losing trader believes the next trade will make it right. Livermore called this the emotional relapse. It's the point where learning stops and compulsion begins. He wrote, "The human side of every person is the greatest enemy of the average investor." That's not philosophy. That's blood and truth written in the history of trading. The Livermore Law isn't about a rule book. It's about awareness. When you break the law, you pay the price. When you obey it, you profit. Simple, brutal, eternal. Eternal. As we move deeper into this story, I want you to think about your own habits. How many of your trades come from strategy, and how many come from emotion? Because that's where the Livermore Law begins to separate the winners from the crowd. Now, let's go further, into the heart of the paradox that destroys most traders before they even know what hit them. Hook line. The cruelest part of the market isn't losing money, it's realizing you were right too early. Every trader faces that moment. You spot the setup, you trust your read, you act, and then the market punishes you. Hours later, the same stock moves exactly as you predicted. Only now you're out of the trade, emotionally drained, or chasing your loss. That's the paradox that Jesse Livermore warned about. You can be right on direction and still wrong in execution. You can know the truth and still fail to profit from it. What would you do in that moment? Do you double down, walk away, or question everything? Comment your answer below, because that single choice reveals who you really are as a trader. The inner conflict starts with belief. You believe the market should reward knowledge. It doesn't. It rewards timing and discipline. Livermore learned that the hard way. He once said, "The game taught me the game." No mentor, no shortcuts, only pain, repetition, and observation. He realized that the market's movements were never random. They were driven by the rhythm of human emotion. Hope, fear, impatience, euphoria, panic, and surrender. Here's the paradox. The more you learn, the more dangerous you become to yourself. Knowledge builds confidence. Confidence breeds risk. Risk, if unchecked by discipline, becomes destruction. That's why so many traders rise fast and fall faster. They learn enough to be confident, but not enough to be patient. Livermore called this the transition zone, where a trader believes he's mastered the market just before the market proves otherwise. You see it every day. A trader wins 3 or 4 trades in a row. He starts to think he's cracked the code. He increases position size, starts ignoring stops, and begins to confuse luck with skill. Then, the inevitable happens. A single loss wipes out all previous gains. The trader blames the market, the news, the broker, anyone but himself. But deep down he knows the truth. It wasn't the trade that failed. It was his psychology. Livermore described the market as a test of character under pressure. He believed that every move a trader makes reveals something about his emotional balance. That's what makes trading such a brutal mirror. You can't fake calm when money is at risk. You can't pretend patience when opportunity seems to slip away. The paradox is that the market rewards inaction more often than action, but your instincts scream to do something, anything, to regain control. That's the conflict that destroys most traders. They want certainty in an environment that punishes it. They crave control in a system built on chaos. They chase patterns where none exist and ignore the one constant pattern that matters, their own behavior repeating itself. Livermore once sat out of the market for weeks while others chased every tick. When asked why, he said, "There's a time to go long, a time to go short, and a time to go fishing." He wasn't joking. He meant that being flat was a position to. He understood that opportunity costs less than impulsiveness. Modern traders forget that. They think more trades mean more chances to win, but more trades often mean more exposure to their own weaknesses. The Livermore Law operates in silence. It waits. It punishes overconfidence and rewards patience. It knows that you'll eventually make a decision from emotion, not logic. And that's where it strikes to Livermore. This paradox was the core truth of speculation. The more you seek to control the market, the less control you have. The only variable you can master is yourself. Now we enter the real battlefield. Not the charts, not the price action, but the mind itself. The psychological trap that consumes even the most talented traders, the one Livermore himself barely escaped. Hook line. Every trader thinks they can handle pressure until real money is on the line. The psychological trap begins the moment you attach emotion to a trade. It's not about the chart anymore. It's about proving something to yourself. You want to be right, not just profitable. That's when logic starts to fade and ego takes control. Jesse Livermore called this the invisible hand of ruin. It's not the market that breaks you. It's your own mind pushing you towards self-destruction. Tell me, have you ever moved a stop-loss because you were sure the market would turn back in your favor? Comment below. Be honest. Every trader has done it. That's the trap. You know it's wrong, but you do it anyway. You're no longer trading your plan. You're trading your emotions. Livermore understood that pattern. He said, "It was never my thinking that made the big money for me. It was my sitting." But sitting requires emotional control. It requires faith in your system and indifference to short-term noise. Most traders don't have that. They need action to feel alive. They equate movement with progress, and that's how the market hooks them. The psychological trap feeds on 3 emotions: fear, hope, and greed. Fear makes you sell too early. Hope makes you hold too long. Greed makes you ignore both. These emotions form a cycle that repeats endlessly until a trader learns to recognize the pattern within himself. Livermore's downfall came when he broke his own law. He let hope override judgment. After years of disciplined success, he re-entered the market impulsively, chasing the same excitement that had once made him rich. It cost him everything. That's the cruel truth of the Livermore Law. You can master it for years and still break it once and lose everything. Because the law isn't about the market, it's about human nature. And human nature doesn't evolve as fast as technology. Think of a modern trader sitting at multiple monitors, scanning 5 markets, executing on impulse. He isn't competing with other traders. He's competing with his own attention span, his own dopamine response, his own need for control. The market knows this. It tempts him with instant feedback, red and green flashes, sound alerts, everything designed to trigger emotional response. The trap isn't external. It's built into the structure of the experience. Livermore would have called today's platforms amplifiers of weakness. He knew that the easier it is to trade, the harder it becomes to be disciplined, because friction used to protect traders from their own impulses. Back then, placing a trade took effort, intention, patience. Today, it takes one click, and that's the danger. Ease magnifies recklessness. He once said, "There is nothing like losing all you have in the world for teaching you what not to do." That wasn't just reflection, it was confession. He had lived the cycle, just like the traders who came after him. The Livermore Law reminds us that the cost of ignoring psychology isn't theoretical, it's financial. Every emotion you indulge is a position you open against yourself. The real trap is that success breeds vulnerability. A few good trades convince you that you've changed, that you're immune, but you're not. The same emotions lie dormant, waiting for the right market condition to wake them. And when they do, the Livermore Law enforces its price. Without warning, without mercy. Livermore's brilliance was that he didn't deny the emotions. He studied them. He treated his feelings as indicators. When he felt fear or greed, he took it as a signal that his judgment was compromised. Most traders ignore those signals. They push through them, desperate to act. That's where they lose. The psychological trap is simple. You become emotionally attached to a market that has no emotion for you. You care, it doesn't. You hope, it waits. You act, it observes. Livermore's insight was that the only way to win is to become as indifferent as the market itself. In the next section, we'll look at how Livermore built his entire philosophy around that principle, how he turned emotional neutrality into the ultimate trading edge. Jesse Livermore didn't just trade markets, he traded psychology, one decision at a time. He believed that the market was nothing more than a living reflection of human behavior. And to master it, you had to master yourself first. He didn't rely on luck or tips or news. He relied on observation. He watched how people reacted, not how prices moved. That's the foundation of the Livermore Law. The market never changes, because people never change. Let me ask you something. When you see a stock skyrocket in minutes, do you feel the urge to chase it? Or when a market collapses, do you feel fear tightening your chest? Comment below. Those reactions are the core of what Livermore studied his entire life. He said, "A man must believe in himself and his judgment if he expects to make a living at this game." But that belief wasn't arrogance. It was discipline. Livermore understood that conviction had to be earned through patience, not emotion. His law was built on three pillars: timing, emotional control, and capital preservation. First, timing. Livermore waited for what he called the line of least resistance. It meant identifying when a market was ready to move naturally, not forcing it to move when you wanted it to. He observed trends forming and waited for confirmation. He wasn't guessing. He was aligning with the rhythm of the crowd. When he saw momentum aligning with psychology, he acted decisively. That's how he built his legendary trades, by waiting for the market to reveal its hand. Second, emotional control. Livermore's greatest battles weren't against other traders. They were against himself. He wrote, "The average man doesn't wish to be told that it is a bull or bear market. What he desires is to be told specifically which particular stock to buy or sell." In other words, most traders want certainty, not truth. But certainty doesn't exist in markets. The Livermore Law demands that you accept uncertainty as a condition of survival. Once you stop fighting it, you stop overtrading. Third, capital preservation. Livermore knew that cash wasn't just safety, it was ammunition. He said, "The desire for constant action, irrespective of underlying conditions, is responsible for many losses." He saw money as a soldier in a campaign. Every position was a battle, and every dollar lost weakened his future strength. Modern traders often forget that. They treat cash as wasted opportunity instead of defensive power. Livermore didn't. He used it as a shield. His philosophy was cold, almost mechanical, but that's what made it powerful. He knew that emotions could never be eliminated, only managed. He trained himself to recognize the early signs of emotional bias: the impatience before entry, the hesitation before exit, the rush after a win. Each signal meant risk was rising, not falling. His method wasn't about predicting the market, it was about predicting himself. He once sat quietly during a roaring bull market, watching everyone else chase prices higher. When asked why he wasn't trading, he replied, "There's a time to make money and a time to keep it." That mindset saved him while others were ruined. The Livermore Law isn't about constant gain, it's about avoiding self-inflicted loss. In a world where traders are addicted to noise, Livermore preached silence. In a time when everyone wanted action, He taught patience. His rules weren't theories. They were survival codes written in the aftermath of fortune and failure. Each one formed a barrier between emotion and execution. He lived by them, broke them, and paid the price when he forgot them. His law was clear. The moment you start trading from emotion, you're already out of the game. That's why he said, the speculator's deadly enemies are ignorance, greed, fear, and hope. And yet, his legacy wasn't built on perfection. It was built on recovery. Every loss was a lesson. Every mistake became data. Livermore didn't seek to avoid pain. He sought to learn from it faster than anyone else. That's what separated him from the crowd. Now, to understand how this law applies to you, we need to see it in action. In the next section, we'll step into a real-world moment, a story from the market that shows exactly how Livermore's philosophy turns chaos into clarity. Hook line: the year was 1907. Wall Street was in chaos. Panic had gripped the market. Banks were collapsing. Stocks were falling like dominoes. And fear was the only thing being bought. Jesse Livermore sat in his office, silent, detached, watching the tape roll. He wasn't panicking. He wasn't buying the dip. He was studying behavior. Every tick on that tape told a story, not about companies, but about emotions. He saw desperation in the selling pressure, exhaustion in the volume, and confusion in the reversals. To him, that was opportunity, not because prices were low, but because emotion had reached its peak. Now, think about this moment. Imagine your screen turning red, your positions dropping, and every headline screaming collapse. Would you sell everything, or would you wait? Comment your reaction below, because this is where Livermore's philosophy separates the survivor from the victim. While others were liquidating, Livermore began shorting the market, not recklessly, but methodically. He waited for confirmation, for each rally to fail before pressing his position. He wasn't reacting, he was executing. He once said, "It was never my thinking that made the big money. It was my sitting." That sitting earned him over $3 million in profit during one of the worst financial crises in history. What's remarkable is not the money, but the mindset. Livermore didn't see chaos as danger. He saw it as a test. He believed that markets reveal their greatest opportunities only when most people lose emotional control. His composure was his edge. He understood that the crowd always moves in herds, and when the herd runs in panic, the contrarian with discipline profits. But here's the deeper truth. After that victory, Livermore's biggest challenge wasn't the market yet, was himself. Wealth brought confidence, and confidence turned into temptation. Over time, he began to break his own rules. He took trades out of boredom. He chased movement without confirmation. He started reacting instead of observing. The Livermore Law, the same principle that made him rich, turned against him when he stopped obeying it. That's the danger every trader faces. The law doesn't stop applying once you win. It tightens its grip. Success amplifies emotion. The market doesn't punish beginners alone. It punishes everyone who forgets the rules that got them there. Fast forward to modern times, the tools have changed. Algorithms scan every market tick. Retail traders operate from smartphones, but the emotional mechanics are identical. Fear and greed still drive the crowd. The 2020 pandemic crash followed the same script as 1907. Panic, liquidation, recovery, euphoria. Different century, same psychology. Those who understood behavior, not headlines, made fortunes. Those who reacted lost everything. Livermore's story is more than a history lesson. It's a mirror. He proved that trading success isn't about prediction. It's about preparation. The Livermore Law teaches that your greatest trades happen when your emotions are quiet and your plan is loud. It's not the market that defeats you. It's your inability to remain objective under pressure. Every trader watching this has lived their own version of that 1907 moment, maybe on a smaller scale, a sudden drop, a missed opportunity, a loss that stings for weeks. Livermore would say, that was your tuition fee. The market doesn't give knowledge for free. It charges interest and emotion. The law is simple. If you want to win, you must think opposite of the crowd and act opposite of your fear. Livermore did that in 1907. He did it again in 1929. He built and lost fortunes not because of the market, but because of his relationship with his own discipline. As the dust settled from each collapse, Livermore never blamed manipulation, news, or fate. He looked inward. That's what made him legendary. That's why his lessons still matter a century later. Because technology evolves, human behavior doesn't. In the final section, We'll bring this full circle: the law, the losses, the truth that defines why 90% of traders fail before they ever learn it. Hook line. The market is not your enemy. It's your teacher, but it only speaks one language: pain. Jesse Livermore learned that language fluently. He made and lost fortunes because he understood one thing most traders never do: you don't trade stocks. You trade your own psychology. The Livermore Law is the law of self-mastery. Break it, and the market takes everything. Obey it, and the market becomes your greatest mentor. Let me ask you one last time. When you look at your trades, can you see your own emotions in the chart? Comment your thoughts below, because once you can see them, you're closer to understanding this law. Livermore's life ended tragically, but his lessons remain immortal. He once said, after spending many years in Wall Street and after making and losing millions of dollars, "I want to tell you this, it never was my thinking that made the big money. It always was my sitting." That statement isn't about patience alone. It's about self-control, the discipline to wait, the strength to do nothing when the crowd screams to act. The Livermore Law can be reduced to a single truth: the market rewards emotional neutrality. The moment you need to be right, you lose your edge. The moment you let fear or greed dictate your moves, you've already given your capital to someone more patient. Look around modern trading today. Notifications, social media, groupthink disguised as insight. Every trader is bombarded with opinions, but Livermore would say, the crowd is never right. He didn't mean that literally. He meant that the crowd trades emotionally, and emotion distorts value. To win, you must separate signal from noise, logic from impulse, knowledge from arrogance. The 90% who lose aren't unlucky. They're untrained in their own psychology. They jump between systems, chase entries, and react to emotion disguised as opportunity. The 10% who survive don't have superhuman skill. They have awareness. They know when not to trade. They know when to stand aside. They know that protecting capital is more important than chasing every move. Livermore's story isn't a warning, it's a roadmap. He showed that markets are neither fair nor unfair. They are simply reflections of human nature, the same nature that creates booms, crashes, and every tick in between. If you can understand that, you stop fighting the market. You start flowing with it. He lived through eras of euphoria and collapse, yet his insight remains timeless. The market will always rise and fall. Traders will always believe this time is different. And every generation will learn, one painful lesson at a time, that the Livermore Law never changes. Discipline first, emotion last. You can't control the outcome, but you can control yourself. That's what Livermore meant when he said, there is only one side of the market, and it is not the bull side or the bear side, but the right side. The right side is emotional balance. The right side is patience when others panic. The right side is walking away when your ego wants revenge. When you watch that next candle form, remember this: every tick on the screen is a reflection of someone's emotion, fear, greed, or control. The market is the sum of all those emotions fighting for survival. The Livermore Law is the reminder that the calm observer will always outlast the emotional participant. So the next time you open a position, ask yourself, who is really in control here, me or my emotion? Because in that answer lies the difference between learning the law and paying for it. The market doesn't forgive, but it does teach. The question is whether you'll listen before it's too late. Comment your thoughts below. Are you obeying the Livermore Law, or are you still testing it? Because in the end, every trader learns it. The only question is, how much will it cost you?